Now, the Bank of England announced it will hold the base rate at 5.25% for the fifth consecutive time. It's a good news for savers, but not for mortgage owners as they continue to face sky-high borrowing rates. Well, here to break it down is GB News' business and economics editor, Liam Halligan, with On the Money. Liam, it's always an absolute pleasure to have you on the show. You know that, my friend. You didn't want this decision. You think it would have been a better idea to cut rates. I'm assuming you've been saying for donkeys and donkeys, Liam. You think we should have some fiscal stimulus. Instead, we got a bit too much caution.
Yeah, I do think the Bank of England is slightly hamstrung by its previous decisions. It's now trying to prove how tough it is on inflation by keeping rates too high for too long, having been very slow to recognise that inflation was coming back in 2021 and 2022. But let's just recap for GB News viewers and listeners what happened at 12 noon. What happened at 12 noon, Martin, is that the Bank of England's 9-strong Monetary Policy Committee, a bunch of economists, they voted by 8-1 to keep interest rates on hold at 5.25%. That's a 16-year high. We can see here on our Wizzy GB News graphic, we can see that interest rates were were low, rose slightly ahead of the COVID lockdown. During COVID lockdown, they went all the way down to 0.25%. That's a record low in UK history. And then after COVID ended, the lockdown ended, we had that large increase in inflation all the way up to 11%. And interest rates rose. The Bank of England did successive interest rate rises to try and bear down on inflation. Now inflation's come down a lot from 11% back in late 22. The last number we got in inflation is only 4% in February, during the year to February. Price rises are easing, but prices are still going up a bit. The Bank of England is under a lot of pressure to cut rates, but it still isn't. I have to say, though, that since the rate decision came out, the Bank of England governor has stressed, Andrew Bailey, that inflation's moving in the right direction and there is talk of interest rates to come quite soon. I can't see it happening, though, when the Monetary Policy Committee is voting by 8-1, a very big majority. I can't see them reversing that in a month or even 2 months. So I reckon the first rate cut in the UK will be May at best, but probably June.
OK, so, Liam, taking your hat off in terms of reporting and now put your hat on in terms of your opinion, why do you think this was a bit too flighty?
I think it's a bit too flighty because it's clear that inflation is falling and it's going to fall really quite rapidly in the next few months. We could be down at 2% in the next month or two, and that is the Bank of England's target. And there's already an awful lot of tightening in the system. What do I mean by that? When you raise interest rates 15-odd times, as the Bank of England has over the last 18 months or so, those interest rate rises take time to feed through. And we haven't yet felt the full impact of those interest rate rises. So I think we should be reversing those interest rate rises as soon as possible. The UK economy is just about growing. It's been flatlining. GDP per head, that's the size of the economy per person, has actually been shrinking for the last year and more. And I think now it would be safe to lower interest rates a bit. But, you know, these days, the Monetary Policy Committee, unlike when it began, when the Bank of England was given independence in 1997, these days the Monetary Policy Committee is full of very cautious, largely Treasury-appointed people. There's very little kind of cognitive diversity. What do I mean by that? That's the opposite of groupthink. There's too much groupthink on the Monetary Policy Committee. There aren't enough people of serious intellectual calibre who use that calibre to dare to have a different opinion from the rest of the group, an opinion they can back up with evidence on authority. We desperately need, in my view, to get people on the Monetary Policy Committee who are not the usual suspects, who are not just the establishment civil servant type economists, people who come from business, from commerce, from the real world, if I may say so. That is an issue, I think, for the Bank of England. At least, Martin, that's my opinion.
Yeah, and a lot of people watching this, Liam Halligan, me included, would probably be hoping that you could be one of those guys making the calls and not them instead. Liam Halligan, always a pleasure. Thanks for joining us on the show.